The following is a presentation of TFNN.
Let's go to our first call of the day. We'll talk to John in Austin, Texas. How you doing today, John?
Way too good, Ken. Appreciate what you're doing. You do such a great job. This show is fantastic every day.
You're a good man, John. Really appreciate it. Thank you.
Live at TFNN, Breakout Investing, with your host, Ken Shreve.
Good afternoon, everyone. Happy Tuesday. Welcome to another edition of Breakout Investing on TFNN, now 5 days a week from 3 to 4 Eastern. The lead-in show to the Tom O'Brien Show from 4 to 6. The number to use if you want to talk to me, 877-927-6648. You can pick my show up as a podcast on iTunes if you can't listen live. And don't forget, you can listen to all TFNN programming on your smartphone. All you have to do is open your smartphone browser, type in tfnn.mobi, and you can get the stream that way as well. Charts that I go over on the program each day are also viewable on your smartphone via Tiger TV. You can go to the homepage of tfnn.com and check out Tiger TV. The show is carried live on Channel 1. It is archived on Channel 13. Okay, we had a very, very light volume session yesterday due to the Veterans Day holiday on Sunday. So today we're going to see volume coming quite a bit higher than what we saw Monday. Let's take a look at the major averages with a little less than 1 hour left to go in Tuesday's session. S&P 500 right now up 1.9, almost 2 points. Not much of a gain at all, sitting right at its 200-day moving average here. Last trading around 1381, almost 1382. You'll notice that today the S&P 500 did undercut the low set on Friday. So that means if we do end higher today for the S&P 500, this would be the first day of a rally attempt for the benchmark index. Okay, we're kind of hoping that that low on Friday would have held, but it did undercut it today, so that means the very brief rally attempt that started last Friday is dead if we close higher day one. Same holds for the NASDAQ as well. Right now, the NASDAQ bleeding a little bit as we head into the close here, now down 7 points, 0.2% to 28.97. NASDAQ hit an intraday low today of 28.77. It also undercut Friday's low, so still looking for the first day of a rally attempt for the tech index. Let's take a look at the Dow. Interestingly, the Dow is still holding above Friday's low. You can see that right here. Not much of a gain, though, only up 3.5 points to 12,818. We don't look at the New York Stock Exchange Composite Index very often, but it is probably the most broad-based stock index out there. And you can see this index is really the only one that has managed to hold above its 200-day moving average here. NYSE Composite today up close to 5 points to 8,058. But while the Dow, NASDAQ, S&P 500 are trading below their respective 200-day moving averages, the NYSE is still holding above that long-term support level. Volume yesterday on the NASDAQ Composite, very, very light, 1.35 billion shares. We are tracking much higher than that today, maybe, 20 to 25% higher than the 1.35 billion we saw yesterday. Volume on the New York Stock Exchange, very light yesterday, 290 million shares. We should at least come in double that today. Bond yields lower again. The yield on the 10-year note down to 1.59%. The yield on the 30-year bond down slightly to 2.72%. U.S. dollar index at 81.06, up 3 ticks. And, I was looking at a chart of the UUP. This is a ETF that holds a bunch of long U.S. dollar contracts. And what's interesting here is you can see it's been on a been in rally mode right along with the U.S. dollar index, of course, and that has been rallying since mid-October thereabouts. The UUP, though, is approaching a possible ceiling here. Its 200-day moving average at 22.27. So it'll be interesting if that turns out to be a ceiling resistance level. If it does and it causes the UUP to back off a little bit, that means the U.S. dollar index probably back off And we'll see if that weak dollar can bring some buyers into this market. But interesting setup here for the UUP. Will it meet with resistance at its 200-day moving average? We will know very soon, I expect. So UUP right now flat on the day at 22.19. So that 22.27 price level will be interesting to watch for the UUP. Gold today down $6.10. Settles at $1,724.80. Check in on the GLD. GLD in a similar situation in terms of being below a former support level, which now looks like it could be resistance. You see how that works? It's almost uncanny how it works. But last week, the GLD rallied back up, got close to its 50-day moving average at 168.78, has been trading lower. Not by much for the past 3 sessions, but the GLD lower again today, down 16 cents to 167.29. So that 50-day moving average for the GLD looks like a ceiling in the near term. Crude oil today, December oil settles at $85.38 a barrel, down 18 cents on the session. Let's take a look at CVR Energy. This is an oil refiner. You know, there's not very many good charts, at least from my perspective, in the oil and gas space. You've got pretty good earnings growth prospects at a lot of the drillers in particular, but the charts just are not showing any relative price strength at all. There's still a lot of sellers overall in the oil and gas sector, but the refiners here, CVR Energy in particular, acting pretty well. You can see ticker CVI recently came down to its 50-day moving average. It has been in rally mode ever since. It is outperforming today, up 2.3% to 38.96. Not much volume behind its recent move, but it is technically a pretty healthy stock out here. Now, I thought I had a chart here for CV. Let's see here. It's always so hard to find. CV. I guess I don't. But anyway, it's a good example of a stock with a strong chart in a fairly weak tape still. So we'll see if the refiners here, particularly CVR Energy, can muster some sort of breakout in the near term. Still looks pretty good. Investors Business Daily earlier today released its IBD TIP Economic Optimism Index for the month of November. It fell 5.4 points, a 10% decline to 48.6 from October's reading of 54. Index readings above 50 indicate optimism, below 50 mean pessimism. The index has 3 components. The one that took the biggest hit was the 6-month economic outlook. This is how measures how consumers feel about the economy's prospects over the next 6 months. That plunged 12.3 points, almost 21% drop to 46.8. So significant reading in the 6-month economic outlook component. Personal financial outlook, which is basically a measure of how Americans feel about their own finances in the next 6 months, that had a pretty big drop as well, down 5 points, a little more than 8% to 55.5. And finally, confidence in federal economic policies basically measures views of how government economic policies are working. That was up a little more than 1 point to 43.5. This poll was done between November 8th and November 11th. 606 adults were polled. Margin of error of plus or minus 4 percentage points. So big drop in consumer confidence from the IBD TIP Economic Optimism Index. Economic data this week, pretty light. It is going to start to pick up tomorrow, though. We've got retail sales for October. Overall sales are expected to be down 0.2% after a 1.1% gain in September. The excluding autos, sales should be up about 0.1%. We've also got the latest reading from the Producer Price Index due tomorrow. Readings have been fairly tame when it comes to wholesale and consumer inflation, but PPI data tomorrow. And we'll also get a look at the minutes from the October 24th Fed meeting tomorrow. Thursday, weekly jobless claims. The Consumer Price Index will be out, and then 2 key pieces of manufacturing data, the Empire Manufacturing for November and the Philly Fed for November as well. We did have some earnings reports in the retail sector. Wanted to take a look at some of those today. Nice day for Dick's Sporting Goods. Big move for the stock, up 5.4% today to 51.34. This is a base building stock. You can see Dick's came down to its 200-day moving average, and big buyers in the stock today. It's bounced back all the way to its 50-day moving average. The 50-day line is at 51.31, and Dick's is last trading at 51.34. Earnings were up 25% from a year ago to 40 cents a share. That was 3 cents better than the consensus estimate. Sales up 5% to $1.31 billion, mostly in line. Same-store sales pretty good, up 5.1%. At Dick's Sporting Goods, same-store sales rose 3.9%, and Dick's Sporting Goods also owns Golf Galaxy stores. Same-store sales there were up 2.3%. Well, that golf business, though, is still a tough business to run, but Dick's seems to be doing a pretty good job with their Golf Galaxy locations. Online sales at Dick's up 47% from a year ago. Good growth there. Company opened 21 new stores in the quarter. They have now 511 Dick's Sporting Goods locations and 81 Golf Galaxy stores. So Dick's remains in expansion mode and has a fairly light debt level considering all the expansion that they're doing. But this is a high-quality name in retail. It's still in the process of forming a base. It started to consolidate gains. You can see here back in September, going to be trying to work its way back to its recent high of 54. Don't like to buy deep inside a base like this. It's best to wait for that right side of the base to complete, maybe get a little shakeout, and last remaining sellers exit the stock, and then you get a bona fide breakout. But it looks like that 52 level could still be some resistance that Dick's is going to have to work through. But great day for the stock today on strong earnings. Arguably the star of the day, Home Depot. This has been a monster performer year to date, and it's off its highs a little bit, but a good solid breakout today for Home Depot. Huge volume in the stock, up 3.6% to 63.37. It hit a high of 64.44, but very, very heavy volume in the stock today. Earnings were up 23% to 74 cents a share, 4 cents above the consensus estimate. Sales better than expected, up 5% to 18.13 billion. So strong numbers across the board from Home Depot, and we'll take a look at its weekly chart here. And what you see is really just a perfect example of what a flat base breakout looks like. Now, it hasn't fully broken out here yet. The stock is off its highs today. I think we're kind of seeing some softness in the market as we progress late in Tuesday's session. But you can see Home Depot had been consolidating gains for 5 weeks. Boom, big volume comes into the stock today, clears a swing point. This is called a flat base breakout. When the market's in a confirmed uptrend, when new money is coming in from the sidelines, these flat base breakouts can really work very well. Problem is we're not in an uptrend yet, so kind of suspicious here. We'll be right back, folks.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN. And I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, everyone, to Breakout Investing. Yeah, major average is in a little trouble here. But at some point, when market conditions start to improve, we'll see these weak opens start to morph into strong closes by the end of the session, and right now it's basically the opposite that's happening, but that's typical in a market that is under distribution. We've basically been under distribution since late September. Not much has changed. We're still in the early stages of a new rally attempt here, but right now the Dow is down 34 points, 12,781. Tech stocks underperforming. The tech index is now down 15 points to 2889, and the S&P 500 down 3 points to 1376. So before I went to break, I was talking about Home Depot's technical breakout today, and this is a picture-perfect technical breakout from a flat base. I called it suspicious because anytime you get breakouts in a downtrending market, it's hard to trust them. Now, the difference with Home Depot is that this is a liquid, large-cap, institutional quality name. It is a market leader. It has made a huge price move over the past 12 months. Year to date, it's up big, but that said, it is breaking out from a base today. It's just kind of a difficult breakout to trust. Support pretty good at the 10-week moving average at 61. It is trading around 63.42 right now, but it's just when the market tide is flowing negative, that's a significant headwind. And when breakouts are trying to make headway, even when there's heavy volume, and volume is enormous today in Home Depot, a market that's under distribution is just sometimes too much of a headwind for these breakouts to handle. So Doesn't mean that Home Depot is bound to fail and that it's only a matter of time before sellers come into the stock. It could work. It's just that the odds are not in your favor making money buying heavy volume technical breakouts when the market tide is still flowing negative. So that's the 411, as it were, with Home Depot. Related news here, SHW, Sherwin-Williams. This is a stock that had a big day yesterday and good follow-through today. Sherwin-Williams, another big market leader. Basing, just coming up hard off its bottom. Yesterday, they announced a strategic acquisition. They're buying Mexico-based paint and coatings firm Comex. That's going to Comex, I should say. It's going to expand their presence in Latin America. Apparently, the market likes this acquisition very much because after a big gain yesterday, Sherwin-Williams up another 2% today to 152.07. So, nice day for Sherwin-Williams. Let's check in on a weekly chart for this name as well. And, geez, thought I had one, but I guess I don't. Well, we'll just have to look at the daily chart. And you'll see a stock that's building the right side of its base. Getting pretty close to a former high set back here in early October. So good day for Sherwin-Williams. Let's check in on Michael Kors as well. The numbers were pretty solid at Kors. This is it's a high multiple stock. Its valuation does not seem extravagant to me. I think it was at one point recently selling at 28, 29 times forward earnings. But you can see Kors has given back a lot of its earlier gains as it continues to toil underneath its 50-day moving average. Some sellers were started to come into the stock last week. It is up 38 cents right now, 0.75% to 50.96. So some sellers still in this stock. The numbers were very, very strong. Earnings up 96% from a year ago to 49 cents a share. That was 9 cents above the consensus estimate. Sales up 74% to $532.9 million, also nicely above estimates. Same-store sales, amazing same-store sales growth here, up 45% from a year ago. But again, high multiple stock still looks vulnerable in this market environment. That said, this is still one to watch because I haven't heard one person. I think this may be a case where the crowd may be right with Michael Kors because it still has the look of an emerging leader. No new companies like this go straight up. They go through consolidation areas, and Michael Kors is a stock that still, I think, has a lot of potential. We're just in a tough market right now, and this one looks like it's just going to kind of base and consolidate, and we'll see if it eventually starts to retest its former highs. But I suspect that when new money does start to come in from the sidelines in earnest, this could be a growth name that a lot of growth fund managers would still like to own. You're listening to Breakout Investing on TFNN, headed into break number 2. When we come back, talk about some other movers today, some earnings after the close as well. So stick with me. We'll be right back, folks.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
Welcome back, everyone, to Breakout Investing. Thanks very much for tuning in. Just a little more than 25 minutes left to go in Tuesday's session. And once again, we've got some sellers coming into the market late here. Not too bad, but Dow right now down 18 points, 12,796. The NASDAQ down close to 14 points, 0.5% to 2890, and the S&P 500 down a little more than a point to 1378. Rough day for shares of Microsoft. Did you see Microsoft today? Down 3.1% to 2713. Interesting story here. The executive in charge of the Windows operating system, a guy named Steven Sinofsky, suddenly left the company. Is going to be replaced by Julie Larson Green, one of his subordinates, or lieutenants, I guess you could call her. The change in leadership comes just a little over 2 weeks after Microsoft released its Windows 8 operating system. So Microsoft investors do not like the look of this departure, and shares are down 3.1% as a result to 2713. If you want to see what a stock under distribution looks like, Microsoft is a good example. Unfortunately, there are a lot of them out there. Distribution refers to professional selling, institutional selling. You can see back in September when Microsoft reversed off its high right here, that big spike in volume. some pretty massive distribution there, and then it has continued in the stock, and certainly a lot more of it today. Microsoft is off its intraday low of 26.75, but big sellers again in the stock. Another name that's been under unequivocal distribution in recent weeks is Apple. Apple's still kind of toiling around trying to find a bottom here. It is up $1.05 right now, 0.2% to $543.88. Just another stock that has been hit hard by institutional selling. Yeah, and probably a lot of growth fund managers taking profits. It has been a big market winner, taking profits, putting their money elsewhere. I think part of its price weakness, as I've been saying in recent shows, is perhaps over concerns about a slowdown in growth ahead, and I think that's a very real possibility. I mean, a company that normally used to growing at 15, 20, 25%, 30%, maybe that growth rate is going to start to slow. I think that's a legitimate concern, and part of the reason why Apple has been acting so weak lately. Take a look at another earnings report that came out earlier today. TJX. They operate Marshalls and TJ Maxx locations. The stock has been, another name hit very, very hard in recent months. It is up 2.5% today to 42. The earnings were up 17% to 62 cents a share. That was a penny above estimates. Sales were in line at $6.4 billion. That was up 11% from a year ago. So, buyers in TJX finally, after a pretty sharp pullback that saw the stock go from about 46 down to 40 thereabouts, and it's rallying back today, but this is a stock that still has a lot more work to do to repair itself, because when you get a pullback like that, it's often a long way back for the stock to reclaim its prior highs. Let's take a look at some names out there that kind of on my radar. NDSN. This is a company called Nordson. NDSN. It's not very liquid. It's got an average daily volume of about 220,000 shares, but pretty good fundamentals, and a stock that is just not really facing a lot in the way of selling pressure. They make sealants and coatings used in consumer industrial markets, but this is a nice little base taking shape here. The stock is holding above its 50-day moving average, and this is a stock, if we do get a sign of strength in the major averages in coming days, which, as I've been saying, is not out of the question. I don't think anybody has any idea where this market's going to go. No one would be surprised to see huge percentage gains this week, and no one would be surprised to see it roll over anew. But if the market flashes a buy signal, technical setups like this can often work nicely. So let me take a look here at a weekly chart for Nordson. Here it is, NDSN, and you'll see a nice little base taking shape here, and a swing point is going to be right around that 62 area. That would be the high point right in here. But pretty good fundamentals. Company had a nice turnaround quarter when it reported second quarter results for the quarter ended in July. Sales were up 22% to almost $380 million. So interesting company, good fundamentals, good technical setup here. Another name that I kind of lost track of that is setting up pretty well here is John Deere. You see, John Deere has been showing excellent relative price strength. Swing point of 87.13. The stock is up 25 cents right now to 85.93. So it's pretty close to a swing point of 87.13. We'll take a look at a weekly chart. For John Deere. I don't know. Oh, here it is, Deere and Company. Yeah, here's the weekly chart for John Deere. A big, long base that's been forming pretty much this entire year. But this is, again, a technical structure that's worth paying attention to. If you're a believer that a market rally is going to happen when it's least expected, we get a buy signal from the market later this week or early next week, this is a chart that could conceivably deliver a technical breakout. So 87.13 is the swing point to watch here, and we'll see if some big volume buyers come into John Deere in the near term. Visa is another name that continues to show excellent relative price strength. Really no sellers around in this stock at all. It is down 53 cents today to 142.71, well off its intraday high of 144.79. This is a name that I would love to own at some point, but the problem is it's just not giving an opportunity to buy, because if you look at a weekly chart, you'll see that the last time it broke out was back in mid-September. That was the time to buy. If you missed it there, you really haven't had much of an opportunity to get in. It's an extended stock right now, and I'd be wary of chasing it up at its current level. So, and that is really the case with a lot of stocks in the market right now. When you see stocks out there that have been immune to selling pressure, there are a lot of instances where they're holding up great and they're not really doing anything wrong, but these are stocks that have been running higher for a long time. And it's not like they're just in the early stages of coming out of a consolidation phase. In most cases, they're extended. They're too late to buy. So, right now, its pickings are very, 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 very slim out there. At least when I look at my screens, there's really not much out there working. I don't want to chase a stock that's holding up well, that's way past a proper buy point, and that eliminates a lot of options out there. So. And plus, with the market acting the way it is, it's a very difficult market right now. Just a tough market to figure out to some degree. But what we know is that we're in a downtrend, and with that information, we know that it's not prudent to make any big decisions with the portfolio. Really doesn't make sense to be nibbling at high-flying growth stocks in a market that's under distribution. So, again, as I always say, without an edge, it's best just to do nothing. At the very least, wait for some sort of buy signal. And even if we do get a buy signal in the form of a big percentage gain in higher volume, and maybe it's a 1.5%, 2% or more gain in the major averages, that does not give the green light to just kind of move all in and buy 5 or 6 stocks. It gives you the green light to start nibbling selectively, maybe 1 or 2 names, something like that, and then you start small and see if they work, because after you get a buy signal, you'll have an idea probably 2, 3, 4 days after the fact whether or not the buy signal is going to amount to anything. But the bottom line is you want to have a good crop of stocks to buy when you get confirmation or follow-through confirmation of a new uptrend. You want to have a good crop of stocks out there to buy, and the breakouts can start happening a little bit before you get the buy signal, and they're going to happen after the buy signal, hopefully in spades. But that could often be an indicator of how strong the rally's going to be if stocks are just popping up left and right, saying, "Look at me, I'm breaking out in heavy volume." That's a good sign, and hopefully that's what we'll see when it happens. Let's take a look at 3D Systems. DDD is the ticker here, under some selling pressure, down for what looks to be almost 3 straight sessions here, down 58 cents today to 41.59. Interesting to see this name under selling pressure. Not that long ago, it was a stock that was flirting with a technical breakout, but it's been under pressure for 3 straight sessions. Industry group peer Stratasys, same basic business as 3D Systems, looking a lot better here. Stratasys is actually flirting with a breakout over a swing point of 69.08. This is a daily chart. You see the stock holding above its 50-day moving average. We swing over, take a look at a weekly chart for Stratasys, and what you have here is a decent technical setup. It broke out of a first stage base earlier this year. Second stage breakout here that occurred in the late summer, and then you've got this kind of the second half of this second stage base. This is what's known as a base on base pattern, but a swing point of 69.08 for Stratasys that we'll be looking at here. So this is a type of consolidation I like to keep an eye on. If the market is getting ready to rally, you want to keep an eye on base structures like this, stocks that have already started to move off their bottom and setting up for potential breakouts. For me, when new money starts to come in from the sidelines, it's not about trying to catch a stock as it's coming off a bottom. It's about looking for stocks that have successfully built the right sides of their bases and are perhaps in the process of breaking out to new highs. So Stratasys is an interesting name. Let's check in on Facebook ahead of a big share a lockup release. Big lockup release for Facebook. Facebook today still kind of toiling around near lows here. It is down 24 cents to 19.83. But tomorrow, on Wednesday, 777 million shares are going to hit the market. Facebook's float is going to be steadily increasing from here on out. So 777 million shares will become available for those that want to sell tomorrow. And we'll see if there's buying demand to soak up some of that supply that's going to be out there tomorrow. On December 14th, Facebook is going to release another 156 million shares that will become available for sale, and then one more lockup release in May 2013, another 47 million shares. So I think I read somewhere that Facebook's float in December, or after the December release, is going to be about 1.9 billion shares. So either way, Facebook is probably a stock that a lot of fund managers are going to want to own at some point. Again, their earnings report that they came out with last month in late October was pretty good, and this could be a viable business. But I think a lot of fund managers are going to want to see another quarter. Still haven't fully embraced this company's growth story and how exactly they're going to monetize the billion eyeballs that they have. But it was a good quarter in late October, and tough company to bet against. But right now, technically, I don't think the stock should be touched with a 10-foot pole. I want to take a look at also Qihu, ticker QIHU. Interesting name, kind of funny name, Qihu 360 Technology. They're based in China, one of the few growth stories that I find compelling right now. The company has turned into a legitimate competitor to Baidu, a stock that a former leader that has been in a world of hurt. We'll take a look at Baidu in just a moment. But Qihu recently launched its own search engine called So.com, S-O.com. Qihu already has a 10% share of the China search market cap of about $2.7 billion. They're going to be coming out with earnings November 19th. It's expected to earn 16 cents a share. Sales up 72% to $81.6 million. So this is another stock that recently came down to its 200-day moving average, has started to work its way higher. It's down 16 cents today to 23.53, but this is another one, new technology, kind of newer company, outstanding growth, definitely a name to keep an eye on. China as a whole, with the economy slowing like it is, there was a time when, China stocks were working in spades. I mean, just everything, companies based in China with ADRs in the U.S., I mean, they were just a dime a dozen. You could find stocks moving. The internet firms, and Baidu was a big winner, but you look at shares of Baidu, another big search firm in China, see it's getting hit hard today, down 5.8% to 98.57. This was a good short candidate a while back, but the stock remains under a lot of pressure. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern, on TFNN. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Welcome back, folks, to Breakout Investing on TFNN. Ken Shreve with you. Let's check in on the markets here as we head into the close, see what's going on. Yeah, kind of an acceleration of selling into the close here. The Dow down 50 points now to 12,764. NASDAQ Composite down 20 points to 2884. And the S&P 500 down 5 points to 1375. Finishing up thoughts on Baidu, Qihoo 360, two China-based internet companies, both Baidu a big stranglehold on the China search market. Qihoo also releases a search engine of its own, certainly has turned into a thorn in Baidu's side, but two technically very different stocks here. Baidu, former leader that's under distribution. Why has it been going down? Simply not more complicated than just concerns about slowing growth ahead. Sales growth has been decelerating in recent quarters. Annual earnings growth expected to still be pretty good, but it's just slowing down. So the market not really sure where new growth is going to come from Baidu. With Qihu, it's a completely different story. Younger company, still plenty of opportunities to grow. And in fact, when you look at annual earnings growth at Qihu, which is, again, the ticker is QIHU. Earnings due November 15th, and I'll pull up the chart here again in Tiger TV. Qihu annual earnings this year expected to be up 37% from 2011 to 70 cents a share. Next year, 2013, they're expected to report annual earnings of $1.08, which would be up 54% from 2012. So you're looking sort of at accelerating earnings growth at Qihu. So Qihu is the one to watch here. This stock has potential in my view. Not ready to buy it yet when the market is in a downtrend, but again, if we can get some new money coming in from the sidelines, Qihu 360. You look at its weekly chart here is. A name that is still has potential. You can see working on its third straight weekly price gain so far this week. All right, wanted to take a look at some upcoming earnings reports after the close today. It's been a busy week of retail. Well, we've got a well-known tech name scheduled to report earnings. Another name that's been under distribution. Cisco certainly not growing like they were in the past. That has really hurt the stock, has made it a 100% unequivocal laggard in the tech space. It still gets a lot of headlines, and people still view it as a bellwether, but I guess people look at a name like Hewlett-Packard as a bellwether as well. But Cisco Systems flat on the day, 16.85 ahead of its earnings report after the close. They're expected to report profit of 46 cents a share, up 7% from a year ago. Sales up 5% to 11.8 billion. People like to hear what Cisco has to say about corporate spending. Are companies opening their wallets, or are they not? Tomorrow, before the open, that didn't work. Let me pull up a chart of ANF here, Abercrombie and Fitch. Abercrombie and Fitch is going to be coming out with earnings before the open. Another broken stock here, or just a stock that sellers are completely in control. A break below the 50-day moving average back in September, tries to rally back. Look at that 50-day moving average. It's a ceiling for the stock. It still flailing around near lows here. The stock is down 11 cents to 31.23. It reports earnings Wednesday before the open. Some other retailers set to report tomorrow before the open. Limited brands, Victoria's Secret, Bath and Body Works, finding support at its 200-day moving average ahead of earnings. Stock is up 89 cents today, outperforming nicely to 47.32. Also tomorrow, NetApp, PetSmart, Williams-Sonoma, all before the open. Have a great afternoon, folks. I'll see you back here tomorrow, 3 o'clock Eastern, another edition of Breakout Investing. Tom O'Brien next.